Hi guys, welcome to today's video. In this video, I'm going to show you how I was able to catch these trades on BTC USD using a simple liquidity trading concept. If you are new to this channel, I would like to invite you to kindly hit on the subscribe button to subscribe to the channel, and also don't forget to turn on the notification bell in order not to miss any further video update from this channel. So if you are ready to see this video, then let's begin. Alright, so now before that, I would like to clear all these charts and then we can begin afresh. So let me use the other BTC chart. Good. So this is a fresh BTC chart I want to use for this analysis. So first of all, what I need to do is to go to the daily time frame. Mostly that is my higher time frame. So as you can see from the daily time frame, we all can attest to the fact that BTC is still on a bullish trend. So as you can see, using the trend line, we could see that BTC is actually on a bullish trend. So when I mark the trend line, you will see it clearly. So those trading the trend line third rule strategy, they will have been able to also catch this trade. This is the first touch, this second touch, and then this third touch. But I'm not using this strategy, I'm using the liquidity trading strategy. So now let me show you how I was able to get those trades. So as you can see from the daily time frame, we all know that BTC is on a bullish trend. Why? Because we have this last break of structure. Even without using the trend line, you can see that is the last break of structure, and then what happened, BTC came and reacted to this point of interest on the daily time frame. So on the daily time frame, this is a key zone, this is a key resistance zone on the daily time frame. So now I didn't take this trade on the daily time frame, but I use daily time frame. I use daily time frame to get my bias, so meaning the directional bias is bullish. So now what do I need to do? I go to the 4-hour time frame. Good. So when you come to the 4-hour time frame, you can see the trend line very well, even though that is not what I use for this trade. So now on the 4-hour time frame, I made the market when it was around this zone. Let me cut it for us to see. I made the market when it was around this zone. Good. So now I saw the market coming. A lot of people caught this sell, even though myself in my previous video I showed you guys how I was able to catch this buy from this zone to this zone. I was expecting price to go and give me a new high, but what happened, price rather reacted to this zone and then came down. So when price reacted to this zone and came down, it came and hit my break even. If you haven't seen that video, I will leave it in the description, you can check it. It came and hit my break even. So once it hit my break even, what did I do? I didn't do anything. I waited because I knew very well that on the daily time frame we have a key supply zone here. So if you trade break and retest, you will understand this is a key supply zone. The moment market comes and breaks that key supply zone or key resistance zone, when it comes back there, it will retest and then continue to buy. But in liquidity trading concept, we don't call it break and retest, we call it a breaker block or mitigation block, depending on the type of market we are currently in. So in this case, this is more like a breaker block because we are expecting price to bounce from this zone, and then when it comes here, it should respect this and then continue to sell. But what happened, when price got to this place, it broke it. So we are expecting that once it comes back there, it should retest it and then continue to buy. And that was what actually happened. So now on the 4-hour time frame, I already know that this is a key zone. So I was waiting for price to come here. So now let me play it for us to see what happened when it got there. Good. So when price got to this place on the 4-hour time frame, actually I didn't take aggressive buy here. Yes, I didn't take aggressive buy here because markets can just respect this and then continue to sell. So when we got to this zone, I shared it with my friends and told them that this is a nice buy, but I will wait for the higher probability setup. So now what did I do? After market coming to retest this breaker block, and then what did I do? I went to the 1 hour time frame. This is on the 4 hour time frame. I came to the 1 hour time frame, and then what did I do? I look at the structure that market is coming from. Here, when it was coming with this substructure or this pullback, we could see that this is the break of structure, and then this is another break of structure, and then this is another break of structure on the 1 hour time frame. So in order to make things simple, I will go to the 30 minutes time frame. Good. So on the 30 minutes time frame, you could see the break of structure clearly around this zone. So this is the first break of structure, and then this is another break of structure, and then this is our last break of structure. So as you can see, once price broke structure, it gives us a lower high and then lower low. So now this was our last lower low, and this was our what? Last lower high. So if price was supposed to continue selling, it should respect this supply zone and then come down. So now what did I do? I waited to see how price will react when it gets to this supply zone. When it gets to this supply zone, I waited to see what happened. If price respect it and continue to sell, then I will wait to see price taking out this level. Then I can join the sell. In that case, I'm totally convinced that BTC has changed direction from bullish to bearish. So now what did I do? I waited for the price to reach there, and then I will see what happened. So in that case, I took out this trend line and then marked this last lower high, and then waiting for see what happened over there. So now let me play price and we'll see. Good. So now look at something. When price got there, it liquidated some people here. Those who are trying to sell around here, it liquidated it, it tapped on it and then continued to sell. But I was still waiting to see how price will finish over there. So now let me see. Let's see what happened. Then boom, you see this price came and took out this high. So this is our first sign of reversal. So now in this case, we have what we call a change of character. So this shows that this our substructure. I don't know if you guys understand what substructure is, because we have different type of structure which is different from market trend. Market trend, we have bullish, bearish, and what ranging market. And structure, we have different type of structure. We have the main structure, we have the substructure, and the minor structure. If you don't know this type of structure, I have a full video that explains this in detail. I will leave it in the description below. You can follow and see the type of structure. So the moment I get this high being taken, this is the first sign that this substructure, this is the substructure, the pullback that was becoming, this substructure is about to come to an end, and then the minor structure is now going to take place. And what is a minor structure? A minor structure is the continuation of the main structure. After every market trend, assuming we are in an uptrend, when you have this higher low, higher high. So this pullback from here to here is the substructure, and then the next what higher high, this one is the minor structure. So if you want to see a detailed video on this, I have it in the description below. So the moment I see something like this, what do I need to do? I first have to mark my point of interest. So in this case, this was my nice point of interest. Any point of interest that has inefficiency within is a nice point of interest. And when you look at this point of interest too, you could see that we have what we call an inducement which is closer to the point of interest. And why did I select this point of interest? Why did I select this point of interest? Because when you look at this, when price touches the higher time frame breaker block, it came back and swept this last low, giving us what we call liquidity sweep. If you don't know what a liquidity sweep is, you can check my other video. I explain liquidity sweep. You will understand it. I may also have to create a full video to explain what a liquidity sweep is in my subsequent video. So make sure to subscribe so you don't miss any video. Alright, so now what do? I waited to see whether price can come back to this my point of interest. So now I was waiting for price, and then what happened around this zone, when price got to here, it did as if it was leaving me by respecting this mitigation block. If you don't know what a mitigation block is, I also have a video in the description that explain what a mitigation block is. Good. So now let's see. I waited. I didn't read anything here. I then waited to see what price is going to do. By then I set this my pending order here. I set this my pending order here and then targeted this as my SL, and then target 1 is to 3 this zone. So now let's see what happened. Price is now giving us a series of break of structure to the top. So this is another break of structure after taking out the last high that gave us this low. It gave us this change of character and then takes this structure. So these three things confirm the trend shifts, that is from the substructure bearish to now minor structure bullish. First is the liquidity sweep, second is the change of character, and the third is this break of structure. So this should tell us that the market is about to continue with its bullish trend. So now it gave us another change of character here. So now let's wait and see what happens, because once price is around this zone, we already have this as our what, as our low. In most cases we call it a swing low. A swing low. If you don't know what a swing low is, that my other video on liquidity trading concept, the full video will explain to you what a swing low is. So now we have this as our high, because we cannot call this one as our high. We cannot call this one as our high until it takes out this low. I think it takes out this low that gave us this last break of structure. So in this case, this is just a normal high, which is also a weak high. It's also a weak high. Good. So now let's continue and see what happened. Good. So now price went and even took out that high again. That was why I call it a weak high, because at any time price can take it out. So I still have this here, even though some people may likely want to take their trade around this zone, which is okay. That is the basic SMC traders, which is okay. But we trade liquidity trading concept, we don't take our trade here. We wait and see what happens. So now let's see what happens. Now price started playing out. It did as if it's good. It now came to this zone. It did as if it was going to buy, and then what happened? Boom, it breaks that zone. So all those who took their trade around this zone will be taken out. So now let me remove it. Good. After seeing price taking out this last low, now I can call this one as what? My minor change of character. Why did I call it minor change of character? Because this is a change of character that will aid price to pull back to my discount zone, and then I will continue. So now in this case, this high become a what? A swing high. Why? Because it has taken out this low that gave us the last break of structure. Good. So now our trading range is going to be from here to here. So this is how I was able to do my markings before I had my set equilibrium. This is our equilibrium, 50% of the Fibonacci retracement tool, and then everything above is in premium, so you don't have to buy within the premium zone, and anything below here is the discount. That is where you have to take your buy. So now let's see what happened. Price came and tapped exactly on the equilibrium and started to buy. So we don't want to jump and continue with this buy, because price has to pull back to the discount zone for us to take our buy. So now let's see what happened. You see price is doing as if it is going to leave us. Boom, and now you see what happened. It came exactly and what activated my point of interest. As you can see, when price got to the 50%, many people will be looking to buy here, So what happened? Price bought small and then came down and took them up. It even swept my inducement, because when you get to this place, some people may also want to buy from this zone, which is all part of the inducement. Why? Because we have a strong point of interest below. So as you can see, this is the candle that swept liquidity. So from that candle to the next candle give me what? An inefficiency within. There's an inefficiency. I don't know whether you people know what an inefficiency is. Inefficiency means fair value gap or FVG. So when you look at this, from this point of interest to this my inducement, there is an inefficiency there. So inefficiency too is what? It's a price magnet. It pulls price towards that zone. So any point of interest that has an inefficiency within, that point of interest turns out to be what? To be a strong point of interest. Even though that is one of the criteria for selecting a strong point of interest. I will make a full video on how to select a strong point of interest, there are 3 things you should look for. So this is just one of them, FVG. So now as you can see, price came and tapped me in, and then what happened? Let's see what happened. And then boom, as you can see, is continue to buy. So now as price was going, I was able to spot another trade. And also looking at this trend line, you will see that those who trade trend line will also catch their trade from this zone, from this place, because once price bounce on a third touch of a trend line, we don't enter direct, we wait to see a bullish confirmation candle. And in this case, this is where those who were not able to catch the trade from this and they are waiting for trend line confirmation, they will have taken their trade around this zone, and in that case they will set their SL here, which is fine. But we, those who trade smart money advanced, that is liquidity trading concept, we could have also put our SL here, because this is the invalidation zone, because price can come deep inside before it continues. So those who trade trend line, they will have catch like this, which is going to be 1:1, and it's not a nice trade. Even though if you set your SL here, it's also okay, that is 1:3. So let's see what happened. Let's see what how good. So those who trade trend line, they will have also entered from this zone after this bullish engulfing. Then you see what is happening. So now let me show you how I was able to catch the next trade. Good. So now once price was going with this minor structure, I told you that this is a substructure in any market. So from here, after tapping on the higher time frame, this is now a main structure. So this pullback is a substructure, that is the substructure point of interest that we catch. So the next move here is the minor structure. So once price was going with this minor structure, it started giving me something like this, a break of structure within. So this is a minor break of structure within. So now after price breaking this structure, it pulls back with this liquidity here. Here's a liquidity, and then left a new point of interest within it. So what happened? Now let's see what happened. Price came back and what? Activated that, and as you can see, once you take that trade, you can also put your SL below here and still target this high. And as you can see, price came back and what? Took it out. So now when price was going again, it gave me this another minor break of structure. And now what do we expect? The moment price give me this minor break of structure, what do we expect? We expect to see another point of interest here. So in this case, this point of interest is more like a mitigation block. This is more like a mitigation block. Why? Because in the minor structure zone, we could see that when price breaks structure and then retraces, so here becomes a strong supply zone. So when it was retracing back, we expect price to bounce from that supply zone to sell. But what happened? Price then broke it. Price came and broke it. So anytime price broke a supply zone or demand zone from a break of structure point, that zone becomes a mitigation block. So now we expect price to what? To come back and activate that mitigation block and continue to buy. So now let's see what happened. Let's see what happened. Good. So you see what happened? Good. Price came back there, and then what happened? Price now continue to buy. So in this case, we set your SL around this zone, and then you will target 1:3. Most of I target 1:3. But let's look at something on the higher time frame. This is our raw swing point. That is where we are targeting. Overall. But mostly I target 1:3. But if you also continue with this, you are not wrong. You can still continue up to this. But mostly I target what? 1:3. So that is what we are currently on. As you can see, boom, price is now moving. So now look at something. As price was also going from here, here this our straight swing high supply zone here. This is a supply zone. We are expecting price to get there and bounce. So when price got there the first time, it bounced. The next time we are expecting it to bounce back from here. We are expecting price to bounce back. But what happened? Price came and broke it. And now what happened? It came and retraces. So this one now became our what? Breaker block, which is different from what? From mitigation block. This is a breaker block because we are expecting price to bounce from this. But what happened? Price came and broke it and then came and retested it. So in this case, you can also take another trade from there. But as for me, actually I couldn't take this trade because by then I wasn't on the charts. I wasn't in the charts because I left the phone and also closed my chart and went out. So if I was to be around, I could have taken this trade also and then ride it to the top, and then let's see what happened again. I caught the second trade. So good. So now here what happened, price now broke structure during this minor structure move. So now what happened, we have a minor break of structure here tapping. We can also get another trade around this zone. So look at something here. Once price broke this structure with a minor structure, now what do we need to do? We can take out the whole of this candle that swept liquidity, the whole of this as our point of interest, and then we can wait and see how price will act. In this case, we will not set our pending order here. We wait to see what will happen because we don't have any form of inducement or liquidity around this zone. We have to see price creating that inducement or liquidity around this zone before we can set a pending order. Other than that, we have to take this trade based on confirmation, that is candlestick confirmation. So let's see what happened. Good. So you see, when price got to this place, it engineered liquidity around this zone. So now we wait and see what will happen. Let's see what happened. Boom. So you see price came here. Good. So once price got to this zone, it taps on this point of interest. Now we can go to the 15 minutes time frame because this is a high risk trade. For this inducement and also this our point of interest is too big. If you are going to set our pending order here, our SL will still be below this zone. And then in that case, I will not get my 1:3. It will be like 1:1.9. So mostly I wait to go to the lower time frame and then get my confirmation. So now that is if my SL is going to be bigger than my risk to reward, because other than that, you consider all these trades I've taken, my SL and my risk to reward are aligning. They are giving 1:3. But here, if I should set my pending order and then take my trade from this zone, and then here I will set my SL around this zone. For this last week is my invalidation zone. Once price break it and then it's coming back to this zone. So in this case, I will not get my risk to reward to be 1:3. I will get it to be 1:1.8. So what do I need to do? I'll go to the 15 minutes time frame and see if I can get a confirmation. So look at something here. When price got to this zone, when it was scanned on the 15 minutes time frame, this is the last break of structure, and now I have this high here. So I have to see price taking that high first. So let me see what happened. You see price is now coming down again. Let's see what happened. Boom. So now look at something here. Price now give us another low here. Okay, this low is a liquidation, it's not a break of structure. So this our high still holds. Let's see what happened. Boom. Price also made another liquidation. So here you see, if you had entered with a buy pending order, even though your SL will still be here, but you will hold this trade and then it will frustrate you. So now I'm still waiting to see price taking out this high before I can enter. Good. So now you see what happened. Price now came down deeply. It came down deep and then give me this. So now this is our high. I want to see price taking that high. Boom. So price has taken that high. So what do I need to do? I will now mark my new point of interest within this zone. Or even I can even select the whole of this. Good. I can select the whole of this. And in that case, let me see. In that case, I'll get my SL to be here because this is the last two before we had this break, this minor change of character. So in this case, on the 15 minutes time frame, this becomes a minor change of character. So this is the last low before we get this minor change of character. So our invalidation zone will be just below here, and then we would still target this high. So as you can see in this case, I have my 1:3. So let's see if price can come back and then tap it. So let's see what happened. Boom. You see price came and activated it. So now we are in a drawdown. Let's see what happened. Let's see. Boom. So you see price type and then we are now going to the top. So this is how I was able to catch this last trade. So now currently we are here, and as you can see, price has taken out this high. So once price has taken out this high, then we can now get a new point of interest around this zone. So the whole of these point of interest are efficient, so we can hold to this zone. We can take this trade here, or let me go back to the 30 minutes time frame. We see good. Okay, so on the 30 minutes time frame, we can now shift our point of interest to be here. So now if price is able to come back to this zone, then I can take another trade, and in that case I'll still set my SL to be under here, and in that case I'm not going to get a nice risk to reward. So let me see, when price gets to this place, I will also have to enter based on confirmation, maybe on the 5 minutes time frame, or if I'm going to go aggressively, I can target this last low. And then target this high as my take profit, and in that case I'm going to get the same 1:3. So this is how I was able to catch this trade. I hope you find this video helpful. If you do, don't forget to subscribe, like and share. Have a nice day. And also, if you have any challenge, you can leave it on the comments below and I will respond to you. And if you want to see the full video on liquidity trading concept where I explain this into details, you can check the video on the below, and you are good to go. Have a nice day. Bye.